Today we're going to settle this once and for all. FHA versus conventional loans. Which one makes the most sense? If you're a first-time buyer, have less money saved, or just curious about what the best loan is for your situation, this video will help. Stick around because by the end I'll show you which one I helped a real family use, and you might be surprised which one saved them the most money. FHA stands for Federal Housing Administration. It's a government-backed loan. That means the government helps protect lenders so they can offer easier rules. Conventional loans are loans from private lenders like banks and credit unions. They are not backed by FHA. They usually have stricter rules. What makes them different is the credit scores, down payment needed, mortgage insurance rules, who qualifies, and how flexible the rules are. Here are the key differences. Credit score needed for an FHA versus a conventional loan. FHA will go as low as 580 with 3.5% down. If your credit is lower, more down payment will be required. Conventional, you usually will need at least a 620 or higher credit score. The higher your credit, the better the terms. Now, a down payment with FHA versus conventional. Now, with FHA, 3.5% down if your credit is 580 or better. Now, if your credit is under that, your down payment could be around 10%. Conventional, on the other hand, has programs that will let you do as little as 3% down, but often 5% or more gives you better terms and avoids extra fees. Insurance costs, FHA versus conventional. FHA requires mortgage insurance. It's called mortgage insurance premium, or MIP. This is always required even when there is a larger down payment. There are also other upfront fees plus ongoing monthly insurance. Conventional loans require private mortgage insurance, PMI, only if down payment is less than 20%. And unlike FHA, you can cancel PMI when you reach enough equity. Now let's talk about your debt to income ratio, or your DTI, with FHA versus conventional. FHA is more flexible. Some lenders accept higher DTI with FHA, while conventional loans tend to have stricter DTI limits. If your DTI is lower, the conventional loan looks better. Now, property and appraisal standards, FHA versus conventional. FHA has more rules on home conditions and safety. Homes must meet certain standards. With conventional, it's usually more flexible in terms of condition. Repairs may be required, but it's often easier in homes needing minor fixes. Every person's situation is different. Let's run through some examples so you can see which loan might win for you. Scenario 1, low credit score, small savings, maybe some extra debt. An FHA loan might be better, less needed up front, more forgiving credit rules. Scenario 2 has good credit, some savings, wants to avoid extra insurance long term. A conventional loan may save you money over years. Now, scenario 3, you only have a small down payment and want lower monthly payments now, but you plan to live in the house for many years. Depending on your credit score, a conventional loan with 3% down could potentially be better than FHA. I recently helped a client that had a credit score around 600, about 5% down, and chose conventional because their long-term costs ended up lower even though their FHA quote seemed easier. We ran both side by sides to compare. Now, let's talk about some common mistakes buyers make when choosing between FHA and conventional loans. These mistakes may cost you thousands if you're not careful. Mistake number 1 is thinking FHA is always cheaper. A lot of people hear lower down payment and assume FHA must be the better deal. But here's the truth. FHA loans always come with mortgage insurance. There's an upfront fee you pay at closing, and then you keep paying insurance every single month for the life of the loan. Over time, that can add up to tens of thousands of dollars. So while FHA helps you get in the door sooner, it isn't always the least expensive choice in the long run. Mistake number 2 is assuming conventional is always better. On the flip side, some buyers think conventional loans are the gold standard. But if your credit score isn't strong, or if you don't have much saved for a down payment, a conventional loan can actually end up being more expensive. You might get hit with higher interest rates or higher PMI, private money insurance. That's why it's not safe to assume one type is always better. It depends on your numbers. And mistake number 3, only looking at the interest rate. Another big mistake is focusing just on the rate and ignoring the rest of the cost. A smart buyer compares the total monthly payment, including principal, interest, property taxes, homeowners insurance, insurance and mortgage insurance. Sometimes a loan with a slightly higher rate ends up being cheaper overall once you add everything in. Mistake number 4, forgetting about how long you're staying in the home. This one is huge. If you plan on staying in the home long term, a conventional loan can save you money once PMI falls off. But if you're thinking of living there just a few years, an FHA loan with a lower entry cost might make more sense. Too many buyers forget to factor in their timeline, and it really matters. Don't guess, run the numbers for both options side by side with a professional. When you see the actual monthly payment and the long-term costs, the right choice usually becomes very clear. Here's a bonus tip that a lot of first-time buyers don't think about. Let's say you buy your first home with an FHA loan. You picked it because it was easier to qualify for, or because you didn't have a big down payment saved up. That is totally fine. FHA is designed to help buyers get in the door. But here's the thing, you don't have to keep that FHA loan forever. Once you've built up some equity in your home, usually 20% or more, or once your credit score has improved, you can refinance into a conventional loan. Why would you do that? 2 big reasons. 1, get rid of FHA mortgage insurance. FHA requires you to pay insurance every single month, and in most cases it never goes away. But with conventional, once you have enough equity, that insurance drops off. That could save you hundreds of dollars every single month. And 2, lower your interest rate. If rates drop in the future, refinancing into a conventional loan might also lower your rate. Even a 0.5% difference can mean thousands in savings over the life of the loan. Think of it this way, your first loan doesn't have to be your forever loan. It's just your starting point. You can use FHA to get into the home now, then make a plan to refinance later when the time is right. The key is to talk to your lender regularly. Check your equity and know when the numbers make sense. That way you're not just buying a house, you're setting yourself up for long-term financial success. Let's quickly recap. FHA equals more flexibility, lower credit needed, easier to qualify, but you'll pay insurance always and sometimes more in the long run. Conventional equals stricter rules, higher credit score needed, but can cost less over time, especially if you can put down more money and plan to stay longer. Which one wins? Depends on you, your credit score, how much money you have for a down payment, how long you plan to live in the home, and your bonus was refinancing from FHA to conventional is a smart strategy if your situation improves. If you want a real side-by-side cost comparison for your numbers, let's talk. Click the link, or you can always call or text for a free 15-minute strategy session. We'll run your numbers, down payment, and monthly costs so you can pick the best loan for you. If this video was helpful, hit that like button, subscribe, and leave your biggest FHA versus conventional questions in the comments. Thanks so much for watching, and I'll see you in the next video.